Everyone, this is Teddy Coxstead from Forex Trading Unlocked, and we are here on November 11, 2020 with a US dollar Forex buy signal analysis trade for you. We're going to take a look at what's going on with this Forex currency cross, but before we do that, we want to just take care of some business here. This is our disclaimer reminding you that this webinar is for illustrative and educational purposes only. So with that, I just want to remind you that this is where you're just here to learn and not execute, but even though we have already. Now we're going to also give you one real quick plug. We have a buy signal. It happens to be a Japanese candlestick pattern. If you want to learn how to trade these signals properly, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com. It's available in paperback and Kindle version, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And with that, let's get to our live action here. We have the Forex-Trading-Unlocked.com website pulled up, our workstation page, and we already filled in the lines and the analysis. And let's see what we got going on here. So on Monday, we had a bullish engulfing line buy signal, like a balloon underwater. This market took off after setting a new low. Now, it hasn't made a higher move high, but one thing's for sure, this market's been trending lower for a very long time. And look at this volatility. It absorbed 1, 2, almost 3 days, all in one day's trade on Monday. Now, the funny thing is, the US dollar yen trades typically inversely to the other currencies, meaning that if the other currencies are bullish and strong versus the dollar, typically the yen isn't, and then the opposite is true. When they are weaker versus the dollar, typically the yen is stronger versus the dollar. There are times when the yen trades in tandem with the other currencies. This is not an always situation, but when they are just free floating and not so much, how can I say it, being motivated and driven by the same fundamental factors, being obviously falling or strengthening against the dollar, then that's when the yen, or excuse me, the Swiss rather, has these moves. So the US dollar Swiss is the flight to quality currency for Europe, and this one, the reason I was bringing up the yen, is it had a inverse move to this market, and we'll get into that in just a second. So we have the US dollar Swiss. It had this bullish engulfing line buy signal, big rally, continue to follow through for the past 2 sessions, and right now today, as we are heading into Thursday's trading, it's just hovering below its highs. Now, this key level here at 91.76 is a big breakout point. Now, the reason I was talking about the yen is that the US dollar Swiss is the #1 flight to quality currency next to the dollar. The next one is the US dollar JPY. Now, why is that? What does that have to do with the Swiss? Well, when the US dollar is, like I said, trending one way, typically these currencies, when they band together, they will have similar moves. Well, this one here is amazing that the US dollar yen exploded massively, and this market has been trending lower just like the Swiss. Now, this one had planted a lower move low. It did make a higher move high. Now, this volatility is something I want you to take a look at. This is a very extreme move that happened over the course of one session into the others, meaning that dollar strength really prevailed. Now let's go back to the US dollar Swiss. The US dollar Swiss chart looks very similar. Remember, because the US dollar is the first currency in the cross, so that's not flipped over like the Euro US dollar. So now obviously the Euro US dollar is weakening right now versus the dollar, so is the Swiss. But so is the yen. Now the reason why I'm saying this is because they're flight to quality currencies, the Swiss and the yen, and the dollar is also a flight to quality. If these two are weak, then that's a big signal of dollar strength. Now, does that mean the dollar is going to become a major bull? Absolutely not. But it means that as far as the big flight to quality currencies, we've hit that buffer zone, meaning that the Swiss and the yen have pretty much planted a line in the sand saying that we're not going to have the dollar become that weak against us. They're not going to be that strong against our currency. Now, why would this be? Well, the reason this would be is that the Japanese government and the Japanese central bank, when it comes to their currency, there's times they want it to be strong, there's times they want it to be weak. But especially right now, the weaker the dollar becomes, the stronger U.S. exports become, and the less the demand is for U.S. imports, meaning countries like Japan, their goods become more expensive and less likely to be sold in the U.S. Now, the Swiss don't have that problem. However, there is the flight to quality financial sector issue, and that's where I think you have to really, really look at how these markets exploded on Monday with these radical moves. And just to give you an idea of what this volatility is about, let's take a look at the Euro US dollar. Now remember, we're focusing on the Swiss. Now the Euro US dollar, it made a high on Monday just like the other ones made lows. The dollar has been gaining versus the euro over the past few sessions, but not that extreme. When you look at it, this has moved over the past few days, and it's only retraced a little bit of this move. It set a new high, and now it's heading right in the middle of its range. Go back to the US dollar Swiss, however, and look at what we have. We made a big newer move low, and we just fell just shy of a higher move high just yesterday. But look at this. We took out 1, 2, 3, 2.5 days worth of trading all in one day, just like the US dollar yen. So I think the odds are, because of the fact, like I always say, the best indicators for a market is other markets. We already breached this 91.76, this little dotted line here. I think if you get above 92.04, this is going to be the big breakout area. If we get above that, we're already coming into this downward sloping resistance right here, trying to neutralize and take out the trend that we've been trending lower in for quite some time. Doesn't mean that we're going to be overall bull. There's no reason why this have a big correction to the upside. Remember, it wasn't that long ago the dollar was flirting with parity with the Swiss, and for a long time. Now it just bounced off of below 90 cents to the dollar. These are things to take into account. You really want to watch, because when it comes to, like I said, once again, the flight to quality and where currencies do set certain bottoms and tops. Now, does it mean that this currency can't go lower than where it just set a low a couple days ago? Absolutely not. But right now, because of what's going on with the US dollar yen and how the dollar has been basically falling versus most currencies up until Monday, I would say that you really have to take this buy signal into account and look at this, get ready for a breach of this 92.04 level with a nice upside target of around 93.30, like right in the middle of this bullish upside target zone. I don't see this market really getting above any further, like up by this 94.40. Could it on an extended or overzealous rally, especially coming off a low like this? Absolutely. But when you really look at the bulk of the trading, what's happened for the past couple months, the market fell below it for a couple days by a little bit, and now it's just trading. We're basically just in the higher end of the range where it's been for the past couple months. Still bullish. We're not looking for any real bearish move here right now. We definitely are looking for a follow through and definitely for a more flirting with this 91.76 area. 160.30. Things to key off of will be watch the US dollar yen. If you see the US dollar yen trade continue to rally, odds are you're going to see the US dollar Swiss continue to rally as well. And remember that what's going on in the EU, the euro and the pound especially can't move very much against the dollar until trade agreements are made. The Swiss don't really care about the trade agreements because they still have their currency, so what happens to the euro and what have you, and it does impact them, but like I said, they have their own currency. That changes things, meaning that you will probably see, like I said, the US dollar Swiss and the US dollar yen continue to rally for the short run and then start to stabilize as we head into the middle of December probably and into the end of the year. While the same token, you will most likely see an inverse trade going on with the euro and the pound, because it's likely to be very restrictive as far as capping the action in the euro as well as the pound versus dollar. Both of them are short term, and right now I think that you're going to see them to come off these highs and basically set a range. And if they set a range and don't have any major moves, the Swiss itself probably doesn't have any major moves to go off of. So, but the big thing you want to look at is this US dollar Swiss as a bull. So real quick, just to give you kind of an idea about Swiss strength and weakness, CHF over JPY. So as you can see, that's very neutral. Swiss JPY, when we're talking about those two, they're sideways. There's no real trending there. But let's look at the CHF versus the euro. So the CHF versus the euro, in the past couple days, set a bottom, is trying a little bounce. The Swiss fell off the euro. So what does that say? The euro is falling off the dollar only by a little bit. If the Swiss fell off the euro, that's why the US dollar Swiss is a big buy right now. So you always use the other markets as an indicator, and that's kind of it is confirming where we're at with the US dollar Swiss. And we would like to see the US dollar Swiss continue to go higher over the next few sessions into the next week or so, challenge those little target areas, and we'll see what happens. Really, as far as if you're bearish this market, I would just definitely make sure that you be mindful of this 92.04 level. Anything above here, if you're short, besides being on the wrong side, you're going to just get beat up. Now, if you are looking to pick off this market and sell into these highs, thinking that the rally is going to fail, now is actually a low risk sell trade, because you look at the markets trading at 91.60, you risk 91.60 up to 92.04. You're looking at 45 pips risk to look for a break that could potentially get back down to, it can make new lows, but odds I would say more likely get down to 90 half to 91 even, somewhere in this area, continue back down into the downward sloping resistance lines. But I think there's also a very valid argument that this buying thing, besides having the fundamentals, technically we're coming into by attrition, where we're going to breach this downward sloping resistance line that's keeping the trend intact, which then puts the US dollar Swiss into a big neutral. Brexit, does it impact the US dollar Swiss? Yeah, only because of its relationship to the other currencies, but Brexit as a whole is not the biggest deal as far as concerned for the Swiss. So I hope you like this analysis. If you want to learn how to trade a buy signal like this bullish engulfing line buy signal, remember to read the book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in Kindle and paperback version, or you go to Forex-Trading-Unlocked.com and you can find the link that gives you information and a little bit of a free read on it as well. So with that, I want to thank you very much for your time. You have a good day, and always remember to check out Forex-Trading-Unlocked.com and subscribe.